When Amazon and Flipkart were busy selling iPhones to India's top 10%, one startup was quietly building for the other 90%. That startup was Meesho. And now it's about to go public, not just to raise money, but to prove that India's biggest e-commerce opportunity is not in malls or metros. It's in the small towns, local shops, and WhatsApp groups where the majority of Indians shop every day. And if Meesho pulls off a successful IPO, it would prove that you don't just have to build for the rich to build a billion-dollar business in India. Welcome to our weekly Indian startup news show. I'm Pankaj, your host, and you're watching Backstage with Millionaires, a channel that's also part of Zerodha's 01 network. Now, when Meesho started in 2015, India's e-commerce market was already crowded. Companies like Flipkart, Amazon, and Snapdeal were targeting the urban consumers, people who wanted branded products. But Meesho's founders Vidit and Sanjeev saw an opportunity that no one else did, and that was in the smaller towns and villages. See, when WhatsApp and Facebook became popular in India, millions of homemakers and shopkeepers started selling on these two platforms by creating WhatsApp and Facebook groups. And to help this section, which was much bigger than the urban audience in India, Vidit and Sanjeev built Meesho, which is short for Meri Shop. The idea was to build a platform that turned anyone with a smartphone into an online entrepreneur, kind of like social commerce that we know today. Also, Meesho built its platform in a way that it was easy for this section of people to use. For example, it was a mobile-first platform, since these people used mobile as their primary device. And also the language of the app was Hindi and the other local Indian languages, which again made it extremely easy for people to use it. And because of this, by 2021, Meesho had 13 million sellers, and most of them were women from Tier 2 and Tier 3 cities. But around this time, there was a big challenge for Meesho, and that was it was a low AOV and high volume business. See, unlike Amazon or Flipkart, where the average order value is more than 1500 rupees, for Meesho it was just 274 rupees, which is the lowest in Indian e-commerce. And when you make that little per order, you have to be extremely efficient, otherwise you're out of business. And that's where Meesho's secret weapon came in, Valmo, its in-house logistics arm. Launched in 2022, Valmo quietly transformed how Meesho delivered. In just 2 years, it went from handling under 2% to 62% of their orders. And by taking control of its delivery network, Meesho was able to cut its costs dramatically. In just 2 years, its delivery costs fell from 50 rupees per order to just 38 rupees. While their contribution margin, basically what's left after paying for shipping and discounts, tripled in the same period. And behind this operational discipline is data. Meesho's DRHP says that its system processes over 4 billion data points every day, from predicting delivery routes to understanding what shoppers in Meerut prefers over those in Madurai. It's like every package teaches Meesho's AI how to deliver faster, cheaper, and smarter. And it's safe to say that Meesho turns its thin margins into a moat. And now let's talk about the IPO itself and why it's such a big deal. Meesho plans to raise about 4,250 crore rupees in fresh shares, with a total issue size of around 6,600 crore. But for me, this is not just a fundraising event. It's a turning point for Indian venture capital as well. Because for Indian VCs like Elevation Capital, this IPO could be historic. See, Elevation, which is one of Meesho's earliest backers, owns roughly 14% of the company. And at Meesho's expected valuation of around $7 to $8 billion, that stake could be worth more than $1 billion. That's a 40 to 45x return on the fund's initial investment. To put that in perspective, Elevation's entire early stage fund at the time when they invested in Meesho was around $400 million. So a single investment in Meesho could return the entire fund multiple times over. That's crazy. And it also signals something deeper about the Indian startup ecosystem. For years, global funds like SoftBank and Tiger Global dominated the Indian market, pouring billions into companies modeled after Western tech giants. But those models, kind of like the Ubers and Amazons of India, did not always fit the real India. Indian VCs like Elevation, on the other hand, understood what India really is. They saw that small ticket commerce run by local sellers wasn't a weakness, it was India's strength. And Meesho's IPO could be the moment that validates that thesis. And if this listing goes well, it tells every investor that you don't just have to build for the top 10%. You can also build for the remaining 90%. In a way, it could open the floodgates for the next wave of Indian VCs to double down on companies solving local problems, from rural fintech to vernacular AI. But with that being said, I don't mean that Meesho does not have challenges. Its AOV is small, margins are razor thin, and it's competing against giants. See, Flipkart has Shopsy, Amazon has Bazaar, and Reliance has JioMart, all of whom are now going after the same customer base. The difference is that Meesho has had the first mover advantage. It has built trust among people where building trust is extremely hard. But again, anything can happen. Companies like Flipkart and Reliance can disrupt this space with more money and discounts. It's just that they don't think the opportunity is that big yet. Anyway, let me know why you think Meesho's IPO is a big deal for India in the comments. I've told you my reasons already. Alright, next up, Zepto just raised $450 million. And it's not just another funding headline. This might actually be Zepto's last private round before it hits the stock market next year. The round was led by CalPERS, one of the world's biggest pension funds, along with Zepto's existing investors like General Catalyst and Lightspeed. And with that, Zepto's valuation has jumped to $7 billion, up from $5 billion just last year. Now, this funding gives Zepto something that every IPO-bound company needs, and that is breathing room. See, with about $900 million in cash, Zepto now has enough firepower to aggressively expand into new cities, add dark stores, and invest in technology ahead of its public listing. And for context, that's more cash than Swiggy's entire core business, and nearly half of what Blinkit's parent company Eternal is sitting on. Also, here is the part most people get wrong about Zepto. People think that Zepto is burning money aggressively, but that's not the case. Over the last 18 months, Zepto's order volumes have grown 200%, and a large share of its 1,000 dark stores are already profitable. And that brings us to something Zepto's 22-year-old CEO Adit Palicha said after the fundraise. We have cracked proximity, but not value. DMart cracked value, but not proximity. Let me explain what that means and why it's the most important statement about Zepto's future. When Adit says we have cracked proximity, he's talking about the reach. Zepto has mastered the art of being close to customers, with dark stores spread across neighborhoods that allow 10 to 15-minute deliveries. DMart, on the other hand, has mastered value. Rock-bottom pricing built through bulk buying and ruthless efficiency. So basically, Zepto has the speed and DMart has the affordability. And whoever manages to combine these two could dominate India's retail for the next decade. And that's what this $450 million pre-IPO round is really about. It's not about just expanding stores, but solving the one challenge that stands between Zepto and its IPO dream, proving that 10-minute delivery can be not just fast and convenient, but it can also be truly affordable at scale. Alright, moving on to some quick news updates. Zoho is stepping into the consumer payment space with Zoho Pay, a new app that will let users send and receive money directly through UPI. And this app will work both as a standalone product and inside Zoho's messaging app Arattai, allowing users to make payments without leaving their chats. Backed by its NPCI partnership and payment aggregator license, Zoho plans to expand its fintech offerings from payments to lending and investment, as it takes on giants like Google Pay and PhonePe. Next up, Tata 1mg is entering the pet care space with PawsNPurrs, a new category for pet medicine and supplements available on its existing app. The company will use its strong supply chain and cold chain network to ensure safe home delivery across 22,000 pin codes. CEO Prashant Tandon has said that the goal here is to solve key pet parent pain points like unreliable delivery and limited product options, with the goal of building a major presence in India's fast-growing 7,500 crore rupees pet care market. Next up, WazirX is set to restart crypto trading on October 24th, which means it should be live by the time you're watching this video. And this means that WazirX will be starting its services more than a year after a $235 million hack forced it to shut down. Now, to win back users, WazirX will start with zero trading fees and new security measures through a partnership with BitGo. Also, the company has said that all user funds will be safely migrated before trading resumes. Next up, Shadowfax has received SEBI's approval to launch its IPO, 3 months after filing its draft papers. The company plans to raise up to 2,000 crore rupees, with half of it coming from a fresh issue and the rest through an offer for sale. The company is aiming for a post-IPO valuation of around 8,500 crore rupees, which will give it a 40% jump from its current valuation of 6,000 crore rupees. Alright, now let's move into the funding news segment for today's video. This week, Indian startups raised a total of just $15.9 million, which is significantly lower than last week's $660 million. In fact, only one startup announced their funding this week, and that's probably due to the Diwali week. We should have more funding announcements come in now that the Diwali holiday week is over. But now let's look at the only company that raised funds this week, which is New Delhi-based healthy snacking brand Wonderland Foods. They offer everything from roasted and flavored almonds, cashews, and makhana bananas to snack mixes and even new age options like quinoa puffs and date bites. They started in 2014 when Anubhav Gupta decided to take his family's long history in sourcing premium nuts from around the world and turn it into something fun and modern for everyday snacking. And they have raised 140 crore rupees or around $15.9 million in their first external funding round. Alright, that's all the startup news I have for you this week. Thank you so much for watching and I'll see you in the next one.